good morning. And I assume many of you here are DeFi builders, marketers, etc. So what to expect when you are expecting a stablecoin? So us stablecoin geeks, we think about how to design a stablecoin like this. We think about fundamentals. We're thinking about how to solve the stablecoin trilemma. What are the financial metrics behind our design? We're really thinking with a sense of elegance, right? And then as we get closer to going to market, we realize that this is how they invest in stablecoins. They think about market signals. They're thinking about KOL endorsements, right? They're thinking about the daily news, and honestly, a lot of FOMO. So now, a great go-to-market cannot outrun incentive structures and design. However, a great design will not survive without a go-to-market strategy. So I think you are going to get great advice today on how to design a stablecoin. So I'm going to focus this presentation on something else. So how can we actually harness the power of market signals in order to develop a great go-to-market strategy? So this is premised on the idea that attention begets liquidity, which begets attention, which begets more liquidity. This is the flywheel that, in very simple terms, drives TVL growth. It also works in the opposite direction as well. So what is this one weird trick to bootstrap attention? Signals. So let's talk about how to use these signals to actually kickstart your flywheel and use it as an advantage in your go-to-market. So this is the signal waterfall. And it's premised on the idea that certain groups look above to other groups when they're thinking about how to give a project their own attention and liquidity. So first, you have the philosopher builders. These are the prolific writers, builders of crypto. They are the high priests. They're the public intellectuals. They're the people that I think we in the room really look up to for inspiration. Some examples is Athena going to Arthur Hayes, when they are coming out of the gate. Spark going to Rune from MakerDAO. Generally in crypto, a great, very pertinent example is MegaETH launching with Vitalik's support. Next, you go to the VCs. The VCs, these are the blue chip funds. They're the investment influencers, the super angels. They're the whales. Some examples of this is Frax going out of the gate with Dragonfly and Electric. It's Athena coming out with Dragonfly and ourselves at Kraken Ventures. Even Liquidity, I think they're very well respected for how they think about design. They came out of the gate with Polychain. Third, we're going to the DeFi builders and apps. So this is extremely important for crypto native adoption. When we are designing for this ecosystem, we have to be thinking in terms of composability and leverage. These are key factors. So you need to, first of all, even just be able to sell your vision and collaborate with other DeFi builders. So when you go to this category, it's really also looking for validation on the design of what you're building. For example, when you think about Frax kicking off their growth flywheel, they really leaned on Curve and Convex for that. Think about Athena coming out of the gate. They had relationships with Synthetics, with Pandey, with MakerDAO. And in this category, you can also start to think about L2s in our current meta, right? L2s are access to new community and new branding with the same product. So fourth, these are the crypto institutions. These are your centralized exchanges. They're your market makers. They're even blue chip conferences, such as this, for example. And the idea is this category generally doesn't underwrite their own conviction. So philosopher builders definitely underwrite their own conviction. VCs mostly do, or they would like to think they do, but they're definitely open to leaning on the signals that these philosopher builders give. Crypto institutions generally co-sign conviction with one of these other blue chip categories, right? So some examples are, Athena coming out of the gate also with a bunch of centralized exchange relationships. You had Circle USD with this relationship with with Coinbase, and then Binance with FDUSD. Fifth, you have the DeFi degens. So these are your DeFi natives, they're your KOLs. They are often mercenary capital, but we can accept that, right? Crypto doesn't have a model of paid advertising, so this is essentially your paid advertising. The thing is, this group, they are really open to being first movers to a protocol. So they start to give your protocol TVL, which then gives your protocol implied validated security as the later groups start to come in. And here are some examples of how protocols have used this to their advantage. The idea here is that the strategies you use for this group, I can't really give you a specific framework that might still be pertinent, a year or two or like 3 cycles later. These strategies tend to be very generational, right? Right now we're in the points meta, so maybe that's what protocols are going to do. But maybe at another point it was the airdrop meta. Finally, we are going to the general consumers. These are your organic users. They are the ones that give your protocol monetary premium. When you pull out the incentive structures, they're the ones that still stick around, right? So these are actually the people engaging in your use cases. So now you have thought of a great design, you've thought of a great go-to-market, and you want to start engaging with VCs. I want to tell you about what you should be looking for in an investor and what an investor might be looking for in you. So first, here are some questions to be asking them. What is their thesis? What kind of projects do they invest in? What stage are they investing in? What kind of tickets are they writing? What is their fund structure? Are they independent or are they strategic, right? This gives you a little bit of info about their incentive alignment. Third, what kind of value are they actually adding? Like, when you're selling venture capital, money is cheap. Everything else is what matters. Then ask about their portfolio. Are there synergies? Does it show a sense of expertise? What kind of network do they have that might be helpful for you? Now let me tell you about how do I think about evaluating stablecoin and adjacent projects. I have a framework where first I realize that as a VC, I have asymmetrical information on edge. The kind of edge I might be looking for is in team, regulatory, distribution, cost structure. Then I consider how would a smart consumer, or like a DeFi native consumer, approach this stablecoin. And I'd say the 2 things they probably care the most about are composability and incentive engineering. However, they might also be looking at risk profile, peg stability mechanisms, redemption mechanisms, and use cases. So then I look at this category of A and B, kind of do a art, not science scoring, and I ask myself, what are actually the unique strengths of a project from A and B? As this market is becoming more saturated, this is very important to start to distinguish yourself. But that's not enough. Can a deep well of liquidity actually form underneath these unique strengths? Because you can have a very unique stablecoin, but if it doesn't appeal to enough people, it's not really going to be a venture case, right? And then finally, how does long-term value actually accrue, especially to the VC? When you are pitching to VCs, we are not farmers. We're looking for long-term returns. But now, what is the ultimate signal? Encouraging speculation from signals is definitely a great growth strategy. But there's also a very long zombie yard of stablecoins, hundreds in fact. So in order to truly survive, a stablecoin needs to ultimately find utility and nail use cases. This is the ultimate signal that people are willing to use your stablecoin without being subsidized to do so. Thank you.